I'm going to teach you today how you can use your home and the equity in your home to live the retirement that you actually want in the place that you want, which is probably, if you're watching this, it's in your home. So we'll take a deep dive into one of my clients who just closed their reverse mortgage, and we'll go into kind of what he did, what his situation was, and what he did, and how his life is going to be changing for the better. So a little bit of background. Great guy that I was working with. He's in his late 60s, and his challenge, he loves where he lives. Didn't have a mortgage on his home. He's free and clear, just like a number of the folks that I help. But his challenge was, despite the lack of the mortgage, he really barely had any income. He had one of those jobs where you don't really report a lot of income to the feds. I'm not going to talk a lot about it, but you don't really report a lot of income to the feds, so you don't get a lot of Social Security. So he had a couple of dollars in his savings account, but not really a lot. And he was looking like, again, late 60s, really good shape, walks the beach every day. I mean, lives a good life, but my God, he just didn't have the income, and he didn't have anything to fall back on in case things got tough. So what we did here, but actually before I tell you what we did, so his challenge was, again, what am I going to do? How am I going to continue to live my lifestyle, because I'm damn near out of savings and I'm not bringing in enough money. So there's like no money tree to really pluck. So what we did was we set him up with a reverse mortgage. And if you've watched my videos before, you understand how reverse mortgages work. But give you an idea here, we gave him part of his home's value in tax-free cash without requiring him to make any sort of a monthly payment on it. But here's how we structured it, which is really neat, because we had two issues. Number one was cash flow, and number two was the retirement safety net, or his piggy bank. So first thing on the cash flow. Now, he already didn't have a mortgage, so there was nothing that we would really pay off. But for the cash flow aspect of it, we actually set up this really neat. It's called a LISA, a lifetime expectancy set aside. And what it does is it holds money in escrow, and it pays his property taxes and his homeowner's insurance for the rest of his life. And so he's in his late 60s. This is set up to where the mortgage company actually cuts a check for his taxes and his insurance until he hits about age 86 or so. I forget exactly what the actuarial numbers are, but I think it was 86 or 87. So that's 20 years of cash flow that he's saving by not paying the taxes and not paying the insurance. And one of the reasons why he was kind of in this situation is that where he lives, the property taxes are pretty high, and the insurance is beating them down too. So these were big expenses that we took care of. And so instantly, that's just a huge change for him. So that was the first part, taking care of his property taxes and taking care of his homeowner's insurance, really, for the rest of his life. But then there was more to do, because even with that, he still needed some money to fall back on. So the other thing we did was we set up a line of credit. So we could have given him the money in his bank account. I think he took a little bit. He took $40,000 or $50,000, but nothing huge. The 50 was just to pay off a couple things and to take care of things. Check this out. So how I'm going to get down here while videoing with a bum knee. Woo. All right, we made it. Okay, what was I talking about? The line of credit. The reverse mortgage credit line. So he took a little bit of money, but didn't need a whole lot. So what we did was we created this reverse mortgage line of credit. And it's kind of like a home equity line of credit, but just about 100 times better. But you be the judge. I'm telling you that, but you tell me what you think. So money set aside in the line of credit. And just like any old home equity line of credit, If you don't take it, you're not paying interest on it. Of course, that makes sense. But the money that he doesn't take, it also gets bigger and bigger and bigger every single year for the rest of his life. So the growth right now, obviously, if you watch this in a few months, the growth will be different. Interest rates will have gone up. Hopefully they'll have gone down. But the growth right now is about 7%. So this money that's in his line of credit right now is growing at 7%. Might it start growing at 7.5%? Sure. Might it start growing at 6.5% if rates go down? Sure. But the whole point is he gets this compounded growth on his line of credit. And then when he takes the money out, he doesn't get taxed. He doesn't even get taxed on the growth from it. Why doesn't he? It's a good question, especially if you want to talk to your financial advisor or your CPA. He doesn't get taxed because he's borrowing it. He's not earning interest on it. So what this line of credit in essence is it's a program where you can take money, say you get set up for X amount of money that you can take out of your house. Then every single year, you can borrow more and more and more against your house. Now, if you take the money, obviously that's what it's there for. So no judgment, take what you need. But in his case, and I kind of preached to him a little bit, but in his case, I said, hey, you're getting this little bit of money up front. Continue to live frugally, enjoy your life, but keep as much as you can in that line of credit because this is your retirement money tree right now. And the neat thing about this money tree is that the branches keep growing. And again, they're growing at about 7% per year. The third thing about this line of credit that kind of makes it, that makes it a whole heck of a lot better than a regular HELOC is that the money's there forever. And as I say, if you talk to me on the phone, I'll probably say forever, never, amen. But it's the truth. That money is going to stay in the reverse mortgage line of credit for his rest of his life, and he can always take it. Compare that to a regular line of credit, and most home equity line of credit, they have like a 5 or 10-year draw period. But what if you need it for 15 years? Or what if you're still alive in 20 years? You should be able to take that money when it's needed. You should not be limited to a time frame. And that's what he really, really liked about it. This whole program, he said, wow, okay, I'm going to summarize this here. Not only do I not have to pay property taxes and homeowners insurance ever again, not only do I get a little bit of money to pay off a couple things and have a couple dollars in my pocket for now, but I get this line of credit that's going to grow forever. And it's going to be there down the line when I really, really need it. And that's a scenario. And my God, I mean, he just closed. So just like everybody, I'll check in on him in, say, a month, 2 months. Most of my clients, heck, I get Christmas cards from some of my clients. So we really become friends. But his life, his retirement, his trajectory, his possibilities in retirement have completely changed. Whoa, that's a wave. Just walking in the water right here. His retirement has changed. It's evolved. He's going to be able to do so much more, and he's going to be able to just breathe. His worries have disappeared. At least his financial worries. I mean, health can still happen. But financially, he's going to be okay. He's going to sleep well at night. He's not going to worry. He's going to be able to do the fun stuff. If he wants to walk on the beach, maybe he can grab a drink at the beach restaurant. All these things are so important when you're retired. Remember, retirement's supposed to be your golden years. Is that what they call it? They say the golden years, not the bronze years. And this, fortunately, I mean, it's not Powerball. You're borrowing money. It does have to be paid back eventually when you pass away or sell your home. There's interest that accrues. But if you live in the house for the rest of your life, there is absolutely no downside. So now I'm going to turn around. It's kind of got this wall right here and waves coming up, and my car keys are in my pocket. So it's probably not a great idea to get hit by a wave right there, especially since my knee's all back up. But anyway, like I said, this is a terrific program if you want to live in your home for the rest of your life and you need a little bit of help and you want to continue to live an awesome lifestyle. Or maybe your lifestyle isn't so awesome and you need a little bit of help to get it there. So if you like some help, if you want to just talk through your scenario, your situation, see if a reverse can help. I don't know if it can help you right now. Some people it can, some people it can't. Some people don't qualify. But give me a ring. My name is Jason Eichmiller. You've probably seen my other videos, but if not, go ahead and hit that subscribe button and check them out. I think there's a little bit over 150 that I've put out here about these. But I've been doing these reverses since, 2008. Helped so many people change their lives, and it's just it's a blessing to help them. So anyway, give me a ring. My phone number is 888-309-9705. Again, 888-309-9705. Email is jason@keyhomelending.com. And you can always visit reversequotes.com, www.reversequotes.com, if you want to schedule an appointment. And also I've had some video testimonials from other seniors that I've helped up on there. All right, that's it. I'm just walking the beach with you. Hopefully you enjoyed the sights, and hopefully I taught you a little bit of something. And really, if you need help, I'll do my very best so that you can use your home to just get the absolute maximum out of retirement. All right. Take care of yourself. Bye-bye.